euro, dollar and cable will tend to move in the same direction, mainly because it'll be a dollar movement. Obviously the euro against the sterling moves as well, so I think it's a bit too bland to say they will always move in the general direction, but on the whole they will move in the same direction. I think it is a reflection of how the Eurozone countries are doing. There was a lot of speculation earlier on in the year when when Spain, Portugal, but then particularly Greece and stuff were under pressure, and there was a lot of selling pressure coming into the euro dollar. There were a lot of people talking about it going back to parity against the dollar. Since then, as those economies have turned around, as unemployment has come down, I know, and I would hardly say they're completely out of the woods. Can't say the woods through the tree. No, what's the word? Completely out of the worst of it. The euro has been strong in many ways. Now the story has been more about a weakness in the dollar, and all currencies, certainly the major currencies, the yen, the euro, the pound, have all strengthened against the dollar. So yes, it is an underlying reflection of so the euro is an underlying reflection of the eurozone, but it is also, by definition, a reflection of how the US economy is doing at the same time. It has been less volatile over the last 6 months than in the past. It has traditionally been a very very good indicator of those economies, and therefore has always had a lot of interest. So it has been one of the more volatile currencies. It has had a little bit less volatility of late, but I think that's true across all the world, as the central banks have come in and calmed any expectation, have always strived to keep economies and markets under control, and foreign exchange markets have fallen into that as well. So a lot of the volatility has come out of a lot of the markets, but the euro dollar in particular. Euro dollar has always probably been the most popular currency pair because it is the two major powers, should we say, across the world at the moment. So I think it has certainly the last 5 years has always been the main traded currency, and still remains so today. I think it is the macro story. I think you can get a little bit. There are basic fundamentals that will affect it on a day-to-day basis, but I think the general move is always the macro picture, which probably what makes it interesting for a lot of clients and traders. I think people are generally interested in the macro pictures. It's generally a macro view that people have. Obviously, interest rates in the two countries will make a difference, particularly whilst the European interest rates remain very low. It actually strives less of a demand. I think if euro-dollar starts to come off against the dollar, part of that reason could be because if US rates start to go back up, investors will naturally put their money in the US because they're earning a better rate of interest. Because they're going to put their money in the US, they need to buy dollars. If they're selling euros because their euros are earning them nothing, because their interest rates in Europe are a 0.25% now, talk of zero. If interest rates go any lower in Europe, if interest rates go any lower in Europe, whilst US rates are rising, people will naturally start to look to invest in the US, start to buy dollars, start to sell euros. The central banks have been very key in the movements of the currencies across the world, particularly the euro dollar, as the central banks have kept the economies moving just by keeping interest rates very low. The difference between interest rates has been very static. The currencies have been fairly static. I think there's a good potential for next year, as the tapering starts to stop. There's a lot of talk of the US particularly leading that way because their economy seems to be coming out of recession quicker. That will start another round of currency movements. I think the lack of volatility we've seen over the last 18 months the central banks will struggle to keep in check. I think the market will certainly move on data releases because it is the most commonly looked at market. Certainly on the central bank meetings, the FOMC in the US, the ECB meetings in Europe, a lot of focus is spent on there because they are the next. They're looking for clues as to what the next round of interest rate movements will be, and so certainly over those type of releases, a lot of focus is on those data releases, and a lot of movement in the euro dollar will occur after them.